A company pension plan is a very effective way of saving for your retirement during the years that you are working and earning an income. After you retire, you can then draw on the money in your company pension plan to give you an income for life. However, investing is not simply about putting money in and waiting for it to grow. You have many options available as to how you invest your money whilst you're in a company pension plan. You may decide to take active decisions about where you want your money invested, choosing higher risk funds to begin with and changing the funds you're invested in over time, depending on how close you are to retirement and how you think markets are going to perform. You may decide you want to take very little risk and invest in lower risk funds which shelter against market falls. The potential downside with this approach is that your fund may not rise as quickly as inflation over time, potentially lowering the real value of your pension fund. Either of these approaches requires you to reassess your fund choice over time. If you're unsure as to how to invest or would prefer a more hands-off approach to investing, then a lifestyle strategy is likely to be the most appropriate option for you. You want the money invested in your company pension plan to work as hard as possible to provide you with a comfortable income in retirement. For this to happen, you need a certain level of risk. Of course, you will also want to be as sure as you can be that the money you invest will still be there for you when you retire. For this to happen, you will need a certain level of security. Investing in a lifestyle strategy means that if you are starting your company pension plan in your 20s or early 30s, you will be invested in riskier assets with good potential for growth in order to try to get your savings in your company pension plan off to a good start. Even if those high growth assets fall, your pension investment will still have plenty of time to recover. As you move into your middle years, your pension investment should have built up a head of steam on the back of those high growth assets. At this stage, the lifestyle strategy will lock in much of that growth and improve security by investing a greater proportion of your money in bonds and cash funds. In the later years of your career, you will not want to jeopardize the pension fund you have carefully built up by risking a drop in the value of your fund. So it makes sense that our lifestyle strategy moves more of your pension fund from higher risk assets such as shares into the security of cash, bonds, and gilt-edged funds. In summary, our investment strategy is designed to ensure your money works as hard as it can for you when you are a long time to retirement, whilst safeguarding your investment as you get closer to retirement, giving you the best possible chance of achieving the income in retirement that you're aiming for.